There we go. It helps if you have the right microphone selected. All right. Well, welcome in, everybody. It's good to see you. Um, yeah, not our typical time to be streaming. So we're going to be saying hi to some people who are more in the European time zone. I don't think anybody is awake in. Yeah, no, it's a little late. It's a little late for people to be up in North American time zone. So we're hanging out with the Europe crowd today. Yeah, so we're talking about the bump and run. So uh, a lot of people doing victory laps over this all-time high here, saying, yeah, that was it. That was the top. It came in right exactly at the point at which it was supposed to come in. With the 4-year cycle is confirmed, or 10th, and boom, top. And now the 4-year cycle is confirmed. We're heading into a bear market. We're heading into the crypto abyss. I just don't agree. I don't agree. And there's a number of reasons why, several of which we've covered in recent videos. So I'm not going to dive into the nitty gritty of all the reasons because I don't want to repeat myself. If you guys are interested in that, just check out the last couple of videos from last week and you'll be all brought up to speed. But I want to focus on the technicals here. And we have one of my favorite setups called the bump and run. The bump and run. So the bump and run is characterized by an all-time high coming in and then a resistance point that we just cannot seem to clear for several attempts until there's a capitulation event that comes on high volume. Okay. Then there is a recovery that recovers back up to that original downward sloping line of resistance. And then the candle, the first daily candle to get above this typically signals the beginning of a much larger macro swing high. It's usually a macro swing high. There's something about the bump and run pattern that results in a swing high. So, a swing high means that it'll be higher than $126,000. I haven't seen too many bump and run patterns that didn't result in that when they are coming from the daily time frame, which is what we're looking at here. And yeah, I just think the market's wrong. But the market's always wrong. The market is always wrong. The herd, more specifically, the market is always right. The price is always what it is supposed to be because that is the way that markets work. But the herd is always wrong. 95% of traders lose money. Why? Because they're always wrong. We are at the lows. I've been calling it for a while, but if you're new here, hello, my name is JT. You're watching Black Box Trading, and we've been calling the low for a while here. And I think that over the coming days, we're going to see another attempt to break out on this downward sloping line of resistance. And if we get a daily close above this downward sloping line of resistance, we're off to the races. And people are going to be in denial. They are going to be in denial. They're going to call it a dead cat bounce. We already hear it. It's everywhere. It's everywhere. They're going to call it a dead cat bounce. They're going to call it a suckers rally all the way up to 100K. They'll be like, oh, well, we made it to 100K, but we got to hold 108. We got to hold the 200. If we don't hold the 200, we're in a bear market. We will hold the 200. We will hold the 200 and then we'll take out the all-time highs. And then they'll be like, well, it's like last cycle where we put in a new all-time high and then the bear market came. And the bear market will not come. I'm calling it right now. I need to have a digital trail here live on the internet so that I can reference back to this later and gloat. It's all about gloat. It's all about glory. It's about cred, street cred. So gotta capitalize on that street cred. What do you guys think? Do you think do you think the low is in? And B, do you think the cycle is over? Either one of those things. Do you think the cycle's over? Do you think we're in a bear market? Obviously, you're talking to someone who's laid out extremely clear what his bias is. If you don't agree with my bias, go fuck yourself. No, I'm just kidding. If you don't agree with my bias, let me know why. Let me know why. Let's take a look at the S&P. S&P is knocking on the door of a new all-time high. Now let's get a little scared. Okay, let's get scared together. There is a concerning side to everything that we're seeing here in terms of monetary policy. So the Fed, like you are probably already aware, the Fed did cut rates by 25 basis points, making money cheaper. When money is cheap, people borrow. When people borrow, you're injecting capital into the economy. When you're injecting capital into the economy, asset prices go up. But we're at all-time highs in the stock market. We are at all-time highs in the stock market, and they're cutting rates. Cutting rates is a tool for stimulating a bad economy. Now, the argument could be made that the reason that they're cutting is to try and stimulate the job market, and that's totally fair. That's absolutely fair. That makes perfect sense. They're stimulating the economy to stimulate jobs because unemployment is creeping up with the AI boom, a lot of layoffs, blah, 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 blah. Unemployment is on the rise. So if you inject capital into the system, you can stimulate more growth of the business sector. You can create more jobs and you can try to stabilize or reduce unemployment. So that makes sense. It makes sense that they're dropping rates. But the thing is, what are they going to do when this inevitably falls apart? What are they going to do when the S&P crashes 30%? What are they going to do when the economy can no longer support itself? There's only so many levers they can pull. And usually when the market's doing really well, they raise interest rates so that they can kick the can down the road and they can constrict a little bit. And, you know, they're playing this balancing act to try and avoid this large collapse. And now they're running out of things that they can do. If we do have a collapse, what can they do? Nothing. What are you going to do? Negative interest rates? Look at what happened to Japan. It's just not going to work. It's just not going to work. So, you know, there is a concerning side to all of this. But at the end of the day, what does it mean? It means they're going to print a shit ton of money. They are going to print a shit ton of money. And that's good for Bitcoiners. That is good for Bitcoiners. All right, let's take a look at the trade that we're in here. Let's see how the London session is treating us. Holding on the support range defined here by the last green diamond here on the 15-minute. This was the low of the London. Will it hold? Will it hold? Do we need to come back down and test the 89.5? I don't know. But it's looking good. Let's take a look at the 4-hour here on Bitcoin. This is another characteristic of bump and runs where the recovery looks really sloppy and it looks dumpy. Now we could fall. But overall, I'm still bullish. So, you know, we could do something like this where we come back, retest, and then give another swing to the upside before getting that breakout. Or we could break out, fake out. Here, let me erase some of this. You know, there's a lot of different ways that we could do this. But the important thing is that daily candle close above. As soon as you get that daily candle close above, that's a massive signal. So that's what I'm waiting for. I mean, I'm not waiting. I'm already long. But that's what I'm waiting for confirmation. I'm front running my own idea. All right. Back to the traditional assets. Let's take a look at the DXY, see how that's chugging along. Let's go to the weekly. DXY coming back down to retest the bottom of this multi-year channel. So we do have a tailwind behind us as far as the ability for asset prices to climb, which is good. How's gold doing? Gold up at all-time highs. Yeah, we're getting close to the end. And you know, I still think things can go a lot higher. I think things will go a lot higher because the monetary policy is going to whip the market into a frothy mess, and greed is going to re-enter. Right now, the whole market's bearish. AI's in a bubble. People are broke. People don't have money to spend on assets. We're in a recession. There's a lot of negativity in the market, and that's by design, by the way, because the smart money hasn't, amassed their position yet. But eventually that's going to flip. The narrative is going to flip. AI is not going to be in a bubble. It was just misunderstood before. And now we understand that we're in a productivity boom, and everything's good because the productivity is so high. It doesn't matter that inflation's running hot. It doesn't matter that unemployment is on the rise, because there's a trickle down effect to such a productivity boom. You're going to see that narrative take place. But like I already mentioned, when the cracks start to happen, when the everything bubble begins to collapse, nobody's going to have any tools left. And I think that this is a sign that nobody's going to have any tools left to play, because, gold, all-time high, silver, all-time high, S&P 500, all-time high, NASDAQ, all-time high. Everything is at an all-time high. It's not like usually if the S&P is going up, gold's going down, because S&P represents risk on, gold represents risk off. Everything is going up. This is the debasement trade. This is what, us Bitcoiners have been talking about for, literally decades at this point. We're almost at 2 decades. Yeah, we're almost at 2 decades. We've been talking about this for a really long time. I mean, this is the whole point that Bitcoin exists. So it's interesting times. Hard to navigate. Smart money with really large positions, they're already building cash. People that need to be a little bit more nimble, they're looking for opportunity. And it's not hard to find opportunity. It's literally everywhere. Everything's going up right now, except for MSTR. Although I do think that we called the bottom here on MSTR as well. So we did put out a video on the day that MSTR was falling into this range. We put out a video on December 1st calling the bottom. I maintain that stance. I think that the bottom is in for MSTR. But we can't make our we can't take our victory lap just yet, because not a lot has happened. But once Bitcoin starts to cooperate, that should flip MSTR pretty good. Let's take a look at the total market cap. This is one that I haven't taken a look at in a while. Let's go to the weekly. Any tickers that you guys want me to take a look at, let me know. Total market cap. Let's overlay. Let's do a couple overlays here. Let's overlay total 2 and total 3. Let's make total 2 a different color. Let's go year to date. So not surprisingly, the total cryptocurrency market cap is holding up the best. So that's the entire cryptocurrency market cap, including Bitcoin, is down 6.51% on the year to date. Total two is down 10% year to date, and total three is down 12% year to date. Now, this is good to see because if we go back even further, let's go back, let's say a year and a bit. Yeah, we were seeing this for a really long time where Bitcoin and total three were doing well. 170 from 2023 from the bear market low. Bitcoin's up 170%, and total three was up 167%, and Ethereum was dragging down total two. And that was unusual. That was unusual because we were seeing strength in Bitcoin and we were seeing strength in degenerate shitcoins, but we weren't seeing strength in Ethereum. So it's nice to see that we're actually back to that confluence where Bitcoin is strong, Ethereum is next in line in terms of strength, and then the shitcoins are next in terms of strength. So we're back to a more equal balance. Now, what does this mean? What's the point of what I'm telling you? It means that Ethereum is actually looking good. Ethereum is becoming a play that you're going to want to pay attention to. Ethereum is finally getting to the point where I think it's going to start entering a very favorable market environment. So my top picks for altcoins right now, one has not changed, and that's been Solana. I think Solana is going to be the number one performing smart contract platform for 2026. And I was just so bearish. This entire bull run, I was so bearish on Ethereum. So bearish on Ethereum. And rightfully so. It was shit. I was right. Okay. I was right to be bearish on Ethereum. Nobody wanted to listen to me. You know, in the prior cycle, I got a lot of Ethereum bulls into my community, and I was shitting on Cardano, and the Ethereum crowd really liked that. And then all of a sudden I was doing the same thing I was doing to Cardano to their beloved Ethereum, and they did not like that. But I was right. Now, I'm calling it that Ethereum is going to be a massive contender in 2026. I think Ethereum is going to do great. Can you take a look at Zcash? We will do that. We will do that. So it hasn't happened yet. I mean, Ethereum hasn't even broken past its all-time high, but that would be what you want to look out for. So as soon as we get that breakout on volume past 5K, once Ethereum passes 5K, it's going to 20. No joke. Like, it's going to $20,000. Today it's 3,100. I do not think it is outside of the realm of possibility that with a bullish narrative, and people relaxing on this recession idea, you're going to see $20,000 Ethereum by the end of 2026. I think that is well within the realm of possibility. And let's take a look at Solana. Solana was another one that I mentioned that I'm still super bullish on Solana. Where'd it go? Why am I blind? Oh my God, I was like literally on top of it. Solana's chart looks wild, man. It's wild. Now, obviously, it's doing way better than Ethereum because it actually got past its all-time high. We're like, Ethereum never got past this point, right? Ethereum never cleared the all-time high, whereas Solana did. Solana go well past it. It got well past it, and now it's sitting on top of its all-time high. So it's in a really good position. Now, the glaringly obvious technical things that people are going to be pointing out is this head and shoulders. It's not going to play out. It's not going to play out like that. As soon as Bitcoin starts to rally, this will rally, and then people will be left in the dust. I think that's the theme. I think that's the theme of what we're seeing with a lot of these setups right now is we're seeing setups that are presenting in a way that are almost perfect for leaving people behind. And I love it. I love that. Because when you leave people behind, when people are sidelined or they're waiting for, the head and shoulders, it's going to break down to, freaking $30, $40. When people are sidelined and they've convinced themselves of a certain outcome to the point at which they're selling off their positions, they've got capital and they're watching the asset that they've been watching for years fly away. Why is that bullish? Why is that good? Because eventually the mental torment of themselves being like, fuck, I fucked this up. I have to buy. I have to buy now. Not only are they injecting capital at higher levels and firming up support above the all-time highs, but they're doing so in a frantic, panic, and emotionally driven way. When you're panic buying something, what do? You go to the exchange, you click market, and you buy all in. That eats all the orders in the order book. That makes price so reflexive. People think that it's one of the biggest misconceptions or one of the biggest, collective misunderstandings in all markets is when they look at market cap, they think that that's how much money people invested in the asset. And that's not true. The price is made on the margin. Whatever the bids and the asks are in the order book, the price where those two bids and asks match up in the middle, also known as the last price, because it was the last price paid, that's the price. Market cap has nothing to do with price. How you decide price has nothing to do with market cap. Absolutely nothing. Okay? So when you're hitting smash buy on a market buy, you're eating the order book. When you eat the order book, price is climbing. If you do limit orders, price does not climb. If you do OTC buys like the institutions are doing, price does not climb. It only climbs when you market buy, eating away the orders in the order book. It's not the only way. I'm being a little hyperbolic, but that's the most effective way. So let them be sidelined. Let them be wrong, because it only adds fuel to the fire. That is how you get into the bull market. People FOMO buying and not caring about the price, eating the order book to the upside. So I love the way that things are presenting right now, because it's setting the stage for that exact thing, that FOMO moment to happen. Oh, it was so bearish. The chart looked like it was going to break down, and then all of a sudden it pumped. Counterpoint, the majority of retail is trapped looking for 100 to 100K exit liquidity. That's a crowded trade. The majority of retail is trapped looking for, let them do it. I mean, retail doesn't have any power. Like they don't have selling power because their bags are so small. The institutions are where the bags fill. The only way that retail has power is, like I just said, with the order book being able to move price up. But their available supply that they have to contribute to the market that would result in prices going down is so minor. It's so ridiculously minor, and the smart money is going to buy their bags. So listen, I'm bullish. I do not think that this market cycle is over. Period. Full stop. I do not think that. And I think a lot of people are going to be surprised to find out that 2026 is not only going to be a bullish year, it's going to be a massively bullish year. And that's not cope. That's me analyzing human psychology in markets for years. It's something that, these charts won't teach you. These charts won't teach you. They try to. Some things on these charts do try to teach you, the group think, the group mind virus of sentiment. And we've even attempted to do that with the green diamond on alpha numerics. This green diamond, more than anything to Matt and myself and any of the diehard alpha numerics users, what this green diamond means is people giving up. It represents capitulation. It represents the emotional damage of a market downturn. You cannot forget the emotional side of this. And I'm not saying that you are. I'm just kind of thinking out loud here. But the emotions of the chart are everything. And, we haven't had a market. People didn't get greedy. We haven't seen greed get to the point where people are buying things that they don't understand. And the market top comes in when people are buying things that they don't understand. So when people, old friends from high school that reach out to you on Facebook Messenger that you haven't talked to in literally 15 years are saying, hey, how's it going, man? Yeah, you still into that Bitcoin thing? Like when that happens, those people are about to purchase something they have no idea what they're buying. And only at that point does the market cycle top come in. And we haven't seen it. Part of the reason is retail is broke. And a lot of people look at that as a negative. But I'm telling you, everybody has a breaking point. It goes back to emotions again. Everybody has a breaking point. Yeah, they don't have money to put into cryptocurrencies. Yeah, they need to choose between putting food on the table or paying the electric bill because things are getting really tight. Yeah, they got to pick up extra shifts at work. But man, greed is a hell of a drug. Greed is a hell of a drug. And when that greed kicks in, when you're seeing asset prices climb higher because of rich institutions and billionaires who are smart enough to see the value and smart enough to see the opportunity, and they're ticking the market up higher, people will reach a breaking point and they'll be like, I don't have a choice. I don't have a choice not to do this. Max out the credit card. We're buying XRP. Do this. We're buying this. Pick up extra shifts. I got a DCA now. Everybody has a breaking point. I don't care how broke you are. You'll figure it out. And it happens every single time. So, anyways. Zcash. We had a request for Zcash. Let's see. Was I right about Zcash too? Probably. I put out a video at basically the top of Zcash. Well, let's see. Yeah. I put out a video at the top of Zcash. Actually, no. Credit to the Zcash team. Credit to the Zcash crowd. I think I was 2 weeks too early to the top, which on this chart is ridiculous. I think I was calling it. Where was I calling it? It was like $500. We'll call it 450 because I don't remember. It was like $450. So it did rally another 63% beyond me calling the top. But, I called the top. I called it here. This is the top. Zcash, I mean, it's not going to do anything for a very long time. I think Zcash will be one of the flags at the end of the cycle. So when Zcash finally starts pumping, I think that will be a warning sign that we're approaching the end of the cycle. And this often happens, okay? This has happened many times in prior cycles in regards to privacy coins. It used to be that Monero was kind of like the flag. It was like, hey, the cycle is ending. And there's a theory that the reason people rotate into privacy coins is because they've made all this fucking money on shit coins in a centralized, tracked, walled garden of ridiculousness that's fully tracked. If you're using stable coins, they're tracked. If you're using Ethereum, it's fully tracked. If you're using Bitcoin and you know what you're doing, you can't track it. But people have made all these paper gains, and then all of a sudden they decide, you know what, I don't really want to pay the tax bill, but I don't want to get caught either. Maybe if I just rotate into a privacy coin, I can get away with not paying my tax. So it happens every cycle. At the end of the cycle, everybody rotates into a privacy coin. The privacy coins pump, Monero, Zcash, Dash. There's a bunch of them. And it's a warning sign. It's a warning sign. So what I expect is sideways, maybe a little bit up, but it'll be choppy. You're not going to get this again. I really don't think that you're going to get that again. When things move too fast, like, stay away from them. Twitter was on fire, man. Twitter was just the noisiest I had seen it in a long time, basically since the Caspa crowd started minting millionaires. But this was absolutely freaking insane. Anybody that bought Zcash over $200, you fucked up. And I don't mean to be so callous and disrespectful with that, but with all due respect to anybody who did buy Zcash over $200, you FOMO'd in. And I think if you're honest with yourself, you can recognize that that's a true statement. Like, you FOMO'd into Zcash. You bought into the narrative. You convinced yourself it was a good idea. And you're expecting this thing to go up to $10,000. And I hate to be the bearer of bad news. It does nothing for me. It does nothing but hurt me. It does nothing but hurt my channel, hurt my views, hurt my numbers, and hurts other people. It's not going to happen. It will never reach Bitcoin parity. That's just complete and utter nonsense. But it's not even going to reach 10 grand. It might do, like, I'm just pulling numbers out of my ass at this point, but let's do a trend-based fib extension to get something grounded so that I'm not just guessing. Yeah, I was gonna say $1,500. So that's the 1.618 at 1,400. But it could totally go to 25 as well. So I could see it going up to 25, but 10 grand, I just find that extremely unlikely. Nothing is impossible. Nothing is impossible. But it's not about, is it possible? It's about, is it probable? And what is the probability that you attach to an outcome? The probability of it going to $10,000 is exponentially less, the probability is exponentially less than it going to 1,500 or 2,500. I think that those two are achievable. Relatively achievable. But 10 grand, I don't know. It's possible. I just don't find it very probable. Apart from that, there's really nothing that I can do from a technical, there's no TA here, right? The TA is it's probably going to go down a little bit more. It broke the support. So it'll probably fall for a bit. And it will probably fall to either here at 175, or if it's really bullish, which it is, it's totally doable, it'll go to, say, 300. So either 300 or 150, something like that. I'm waiting for a bullish day RSI divergence. In that case, BTC needs to get lower. Yeah, if you're waiting for it, you need to see that. But we don't need to push lower. Oftentimes when Bitcoin overcorrects to the downside, you're not going to get like a lower low. Not to say that, what you're talking about isn't a good plan, but on capitulations usually are the lows. So, the best that you'd be looking for is a higher low, and we already got a higher low. So I wouldn't be looking for a div on the daily on Bitcoin personally. It's funny. I lost half of the viewers were watching, and then I did Zcash TA, and I lost half the people. People don't want to hear it. They don't want to hear it. Maybe I shouldn't do the altcoin section because that's usually when I piss people off. FYI, I'm usually fucking right, though. In my not so humble opinion, there's not much that's humble about me, but yeah, I'm right about a lot. All right, Bitcoin dominance. How is our little altcoin rotation going? How is our little altcoin rotation going? It's moving along. It's moving along. This is what we're looking for, by the way, something we've been calling for a while. We had the breakout. We're on the bearish retest. We're waiting to take out this low. When we take out this low at 57.5%, 30x portfolios will become the norm. Whatever you got in your shitty little altcoin portfolio that you've been holding for years, whatever you got with your bag of shills that, a bunch of KOLs convinced you was a good idea over years of shilling bullshit and memes, I think from the point at which Bitcoin dominance pivots and takes out 57.5%, a lot of those portfolios are going to 30x. Now, advice from the wise. When Bitcoin dominance is falling here and you've been holding on to a portfolio that you think is doing great or you thought was doing great during the bull market when it was being shilled to you, what a lot of new traders do, which is a massive, massive mistake, is they start to buy new shiny things. So they'll rotate. I guarantee you, people rotated into Zcash. They got wrecked, completely destroyed their portfolios, took their 90% down portfolio and rotated everything into Zcash and went down further. Do not rotate shit. If you bought it, this is not financial advice. I'm not a financial advisor. I'm just a guy on the internet who has a lot of experience in this market, which is not, doesn't make me qualified. I can't predict the future. But based off of what I've seen in the past, the more you touch it, the more you touch your portfolio in this context of it falling from 57 to 40% dominance, the more you touch it, the more you adjust, the more you rebalance that altcoin portfolio, the less money you will make. Period. End of story. Do not be tempted because there's going to be a million new things. There's going to be a million new things. There's going to be countless narratives that you think you're going to be missing the boat on. Trust me, if you really, really, really want to get something, you buy it. You do not rotate into it, because what'll happen is you'll rotate, it'll go down, and the coins that you were holding will go up. All right. That's it. That's all I got. How are we doing on the London session here? Chopping around. London's been so shitty. The London session has sucked. Tokyo session has sucked. I don't even have Sydney on here. It's not worth my time. And New York's been killing it. New York sessions are insane right now. Look at these. So New York's in blue. The New York session did fucking 3.5%, 5%. This was a short, 2.5%. But look at these New York sessions, man. They've been massive. 5%. All the trading happens during the New York session. It used to be 2024 and part of 2025, like early 2025, late 2024, early 2025. It was the Asia session. The Tokyo session was king. Like everybody wanted to trade the Tokyo session. Now it's all about the New York session. And make note. So if you have an idea on how things are going to perform day to day, chances are how the bias plays out is it's going to play out on New York time. So when the New York volume hits the market, if you have a bullish bias, it'll probably play out during that trading session. If you have a bearish bias, it will play out during that trading session. So keep an eye on New York. You know, things aren't moving. Look at this. Tokyo, flat. London, bullshit. I mean, there was a good short there. London was flat until New York opened. Tokyo, shit. London, flat. Then New York opened. Boom. So, yeah, all the volume right now is New York. You can see it. It's all New York. New York, New York. I don't even need to look up at the blue boxes. This is New York. All the volume is New York. So that's when price happens. Whatever your bias, whatever your expectation is, just wait for New York. New York will be your guiding light on whether you are right or not. Anyways, that is it. We're going to wrap things up there. Thank you all for joining in. Don't forget to join the free Discord community. It's free for now. Once we're kicking off in the bull market, it will no longer be free. So it's been free. You know, we've been building a community. We wanted to get that core audience, and you know, all that we had asked in the past is that you, if you took a trade that we provided for you, that you did so with one of our partner exchanges. If you want to sign up with any of our partners, we got really good sign up bonuses below, up to $50,000 in sign up bonuses with BitGet, up to $50,000 with Blowfin. Femex, not quite as high, but I think you don't need as much to get more. I don't know what the bonus is on Femex. Bybit, no real bonus there. But yeah, check out the links below. And by signing up with any one of those exchanges, you get free lifetime access to the Discord. So get in while you can, get in while it's free. These are the opportunities that, you know, bearish and quiet times in the market are going to afford you, because once the light switch flicks back on and we're rocking and rolling in the bull market of 2026, it will not be free. So definitely get in while it's free. That is all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe, do all the things. And until next time, please trade safe. And we will see you guys at the top. Peace.